Howdy there, folks. Welcome into today's video. A lot to discuss in today's video. I got to talk about some very important stocks. I know some stocks that reported earnings in the past 24 hours that some folks want me to talk about that are stocks I own. Things that are going on in the market I got to show you that are very, very important if you're trying to understand where this market's going and those sorts of things. So a lot to get into. Welcome into freezing cold Las Vegas, Nevada. I think we are maybe 60 degrees today or so. Oh, boy, it's getting chilly out there. First off here, before we get into this, by the way, thank you everybody that has subscribed to the channel. I appreciate each and every one of you guys, as always, okay? Carvana. Lucky told me to short this baby. I didn't listen to Lucky. I should have listened to the car guy. I I was like, man, maybe I'll just throw 100,000 in it. But here's the thing: the stock was already down 90+% going into this earnings. So I was like, geez, is it really going to fall more? He's like, it's got another 50% at least. He's like, it's probably going to zero. And I'm like, dang, man, I don't know. Like, come on, really? Like, it's already down 90+%. But he was 100% right. I could have made myself $40,000+ today, like that, man. Covered and you know, I don't know. Crazy, man, crazy. All right, Corsair Gaming. So stocks up big here today, up about 15, 16%. It's obviously having a very good day. They reported earnings, and it matters in a significant way, okay? So before we get into the earnings, the important thing to remember about Corsair is this was a stock that started to get hit way before the market started to get hit. Remember, the market started to deteriorate, obviously, this year, right, in a major way. We went into the year it was very close to all-time highs for the indexes. So while everything else was really flying high, and a lot of the large caps were flying high, big tech was flying high, people were feeling great, stock like Corsair had already been getting hit at that point in time. And so it's just something very important to remember. Like, you know, while everybody else was having a lot of fun, somebody like myself that was starting to buy Corsair and load up on shares, it kept going down, and we were getting hit, right? And so actually Corsair, if you look at Corsair's performance this year versus a lot of other stocks in the market, it's actually been pretty impressive, to be honest, compared to a lot of other stocks out there. Let's put it that way. The company said it had a quarterly loss of $5.9 million, or 9 cents a share. That's compared with earnings of $1.8 million, or 2 cents a share in the same quarter last year. Analysts polled by FactSet were looking for a loss of $9.7 million to 11 cents a share. So basically, they lost less money than folks were expecting them to lose in this quarter. And we know 2022 has just been basically a year to forget for Corsair Gaming. You know, coming off of inventory challenges, coming off of obviously no stimulus out there, coming off of the world opening back up, like everything possible could have worked against Corsair in 2022 essentially. Adjusted earnings were 8 cents a share compared with 3 cents analysts had forecast for, so that's better. And revenue came in at 311 mil versus 304 mil was expected. So definitely feels like a trough type moment for Corsair Gaming, and it feels like better days are ahead. On the conference call, they said something very important. They said that in terms of channel inventory, as far as any problems there, it's almost completely cleared out, except they do have a little bit in the peripheral segment in Europe specifically. So it's great news for Corsair Gaming moving forward. I think Corsair is going to have a great next few years, and it's just 2022 has been a year to forget. It's been a great year if you're somebody that's looking to buy Corsair stock. To be quite frank, you're getting it at the cheapest prices you'll probably get it at for the next several years, if ever, to be quite honest. But at the same time, you know, it definitely feels like a trough moment for a stock like this, and that's good. You know, they've had everything go against them this year, and it's been ridiculous, from container prices to raw material cost. I mean, it's just everything. They had it all thrown at them, and now they're on the other side of this thing. Fubo reported earnings this morning, which Fubo is a stock I started buying here recently, and I want to build this one into a much bigger position. As far as the headline numbers, Fubo announces Q3 2022 results. North American streaming business delivered record high 1.231 million subscribers, exceed revenue forecast. Revenue and subscriber growth for Fubo's global streaming business was strong during the quarter, with North American revenue and subscriber growth coming in ahead of forecast. Fubo closed the quarter with $219.2 million in revenue, an increase of 40% year over year. Not a lot of companies growing 40% at this point in time. No, okay. That's pretty special in this sort of market. You go back a year or two ago, 40% growth. It was like every other company seemed like it was growing 40%. This year, if you can grow at all, you're doing well. Never mind 40%. While ad revenue came in at $22.5 million. That's up 21% year over year. Paid subscribers reached a record high of 1.2 million. That's a 31% increase year over year. In rest of world, company delivered $5.8 million in revenue, 358,000 total paid subscribers. Rest of world includes Molotov, the French live TV streaming service acquired by Fubo in December 2021. Fubo ended the quarter with $307 million in cash and cash equivalents. I think the market cap on Fubo is probably $600 million or so right now, somewhere around there, as far as their cash position, which they need a good cash position because obviously it's in terms of the bottom line, they're losing money and they should continue to lose money. Our third quarter was marked by meaningful advancements against our long-term plan of continued growth with improved profitability along the way, said David Gandler, CEO of the company. Revenue and subscriber growth for our global streaming business was solid, with North American subscribers reaching a record high 1.2 mil. As our premium offering continues to drive even greater number of consumers to our platform, our differentiated product experience and broad content portfolio keeps them engaged, with the quarter representing an all-time low for subscriber churn. That's really good as well, right? Because one thing if you're just acquiring new subscribers, but it's like, you want to obviously keep those folks around for a company like Fubo, so you continue to obviously have that revenue come in and obviously boost up your advertising numbers as well, right? We are more bullish than ever on our model as consumers gravitate toward an aggregated streaming platforms that offer popular content presented to them in custom and personalized experience. We are pleased with Fubo's third quarter performance, demonstrated by our double-digit year-over-year growth in North America across several of our KPIs, subscribers, total revenue, and ad models, said the executive chairman, as consumers continue to become disillusioned with many expensive and content-limited streaming services in the market, and those streaming services turn to our monetization levels with things like advertising. Because essentially, if you don't know like how a company like Fubo can make money, right? There's the regular thing you sign up for, right? Which is like $69 a month, let's say, for instance. Then there's add-ons. So there's like, if you want more channels or HBO or Showtime or this or that, right? You can sign up for these add-ons. So that's a way they can also make money. Another way they make money is through advertising. So basically all the content that's on their platform, they get a certain amount of advertising allowment that basically they can make. The more subscribers you get, the more advertising revenue they can make off that, essentially. So if, let's say, Fubo had 10 million subscribers today instead of 1.2 million, well, then they're much more powerful in the ad market, and they would probably have at least 10x revenues as far as advertising goes, if not 20x, because obviously, once you get bigger and bigger, every single advertiser has to start to pay attention to you, right? And Fubo's just barely starting to reach some critical mass in terms of their subscribers to get advertisers' attention. Now, I love that the stock didn't do anything. It didn't move today, because this is a stock I want to continue to load up on for the next 3 to 6 months. So when it comes to me with Fubo, like, I'm glad this is going. It's very different than a Corsair. Corsair, I was actually hoping went up, to be honest. I was hoping that one went up because a Corsair, I got shares coming out of my ears at this point in time. I got so many dang Corsair shares. Like, I'm not really looking to add more Corsair shares. Now I'm looking to start to make some money on that stock, right? So that's a stock I want to see start to go up. A stock like Fubo, I want to see it continue to be $3 a share. I love that. Continue to be $3 a share. I want to continue to load up on the stock for the next 3 to 6 months, and then I'll have enough Fubo shares coming out of my ears, and then I'll be good with that, and I'll be ready for that baby to go up. So it's a very different, I guess you could say, viewpoint on this. Now, in terms of the Google trends, this is very important. If you look at the past 5 years, Fubo's never been in a better spot. Never been in a better spot. It's much more relevant than it's ever been, and this is something I want to see them continue to do year after year after year, is put up Google trend numbers that are at record highs versus the previous year. You look at the past fall times, which is always when they peak as far as Google trends go. It's never been at this level. So I'm very, very pleased to see that, and I want to see continued progress. Now, this is extremely important regarding this stock, okay? Extremely important. They talk about their ad business, right, in reaching a record revenue number. But this Lynette Kaler, she just came over actually very, very recently to the company, and I mean within the past few months essentially. And she's now leading their sales team there. And just under her leadership, they just added nearly 150 new advertisers to the platform in the quarter. So I think we're going to see this business build out rapidly over the next like 12 to 24 months. And don't be surprised if eventually they're starting to do between $50 million and $100 million per quarter in advertising revenue. And that's going to be very, very profitable for this business in terms of that advertising revenue. So do keep in mind, this is something that you're going to see, in my opinion, likely scale very rapidly. And it doesn't matter how the advertising market is. Obviously, the stronger the advertising market is, the better it is for Fubo. But they're not like a Google or a Meta or one of those companies that they're already massive. So if the advertising market gets hit in a major way, their business gets hit in a major way. For a company like Fubo, like they're like infants in this game. So it doesn't matter. Like literally, recession, no recession, it doesn't matter. They're going to be growing massively their advertising business over the next few years. And so that makes me very pleased. And I think we're going to see, like I said, $50 million to $100 million per quarter in revenue start to pour in to this company. Now, in terms of big tech, a lot of these stocks continue to get hit. You look at a stock like Snowflake today down 12% plus, Palo Alto Networks down 6%, Shopify got hit, Tesla got hit, Netflix, PayPal, Apple got hit again. Apple at one point today was down like 3%. Again, Apple continues to get hit at this point in time. So there's definitely some real weakness in big tech that we're still seeing out there, right? Something I didn't like to see, this is no bueno, okay? Commodities. All these commodities were up huge today. This is obviously a problem for inflation. We need these numbers to continue to come down. We need commodities prices to continue to come down. We don't need them to be up. E-commerce, take a peek at these. These stocks continue to get hit, and it's pretty crazy because we're into November now at this point in time. Usually November, December, there's a good feeling that comes in the market, and usually these sorts of stocks, like whether it be retail, e-commerce, anything like that, starts to pump. But these stocks continue to just be in a tough place. But something I'll say, Etsy, I was listening, obviously, their earnings that came out this past week, and something that's just impressive about Etsy's business model is unlike most e-commerce companies or most retailers, Etsy never takes possession of inventory. And so it's actually a phenomenal thing for their business model, especially if it's a tougher, climate out there. Etsy's just kind of this middleman. They never take an inventory. So I just think that's something that's pretty powerful with that business model. Not a stock I own, but it actually could be one I'm potentially interested in here in the future. Cathie Wood just hit pretty much near a new low at this point in time when it comes to ARK Fund. It is in the 34 and some change here today. Twilio got nailed today. This is one of her biggest positions in the ARK Fund, and it's down 35%. This comes after Roku just got nailed the other day, and then that one's down another 6% here today. And obviously, you see Tesla getting nailed. I mean, the ARK Fund just can't get a break anywhere right now, anywhere. But yeah, Twilio down absolutely massively here today. And this is a stock that now at this point in time is down almost 84% year to date. This was a darling of Wall Street for a minute there. And now no one wants a piece of this stock. I mean, it's incredible. 84% for Twilio? My gosh. And look at the volume today. And it just shows that some of these stocks are flushing at this point in time. When it comes to some of these stocks that, ran up to $30 billion, $50 billion, $100 billion type valuations, right? I mean, 38 million shares trade, and this isn't even before the end of the trading day. I'm sure by the end of the trading day, it's going to be 50 mil plus. 38 million shares traded, average volume 4.2 mil. That's an incredible flush down for a stock like Twilio. Just absolutely massive. It might be a stock I actually take a look at in 23. Now, what we're starting to see is this is actually something we need to see. So we're seeing some of these smalls start to rally and have trough-like earnings, trough-like moves in their stocks and start to go up, right? Well, a lot of these large cap stocks, a lot of the bigs are getting hit hard still at this point in time, right? And, a day like today is kind of perfect where, Tesla was falling quite a bit and then Corsair is up quite a bit. And that's the type of stage I actually need to see and I want to see. It's something that has to play out in this market, right? Because it's been a long, drawn-out market fall here that started way back in February 2021 with the SPAC and the SPEC plays, right? And then obviously in the summer of 2021, we had the meme peak. Fall of 2021, we had Bitcoin and Ethereum peak. November 2021, we had the NASDAQ and the index peak. And then obviously in the spring of 2022, we had real estate peak. And obviously now we're in the fall and about to go into the winter time of this process essentially. And so it's just a process that takes time to play out, man. It's been a long drawn out ordeal, let's call it that. But we're getting the signs that things are moving in the right direction. Now, if you're thinking, what's the next thing to fall? We do have one last thing to fall. And what it is, it's actually the Dow stocks. The Dow stocks have gotten through the situation so far, keyword is so far, without getting hit that hard. And the Dow, I don't even think has ever gone into bear market territory, while the other indexes have gotten wrecked, right? The Russell, NASDAQ, especially in SP 500 at one point was down right around 25% or so. And the Dow has just been holding up well. But I think there's pain coming here. I don't feel like the entire market as a whole can start to rally until we get these Dow stocks big. I think a lot of these small caps will rally in the face of Dow stocks getting hit, but I think these stocks do have to fall. And so I'm still looking at a lot of them as I'm kind of hoping all these stocks pump for the next couple months, to be honest, because I'm thinking about hedging a little bit in 23 with something like SDOW, or maybe just doing a straight up short. A lot of these stocks have just, and I spoke about this in a video, a lot of them had freak situations, and a lot of them will see their businesses deteriorate as 2023 goes along. Companies like Home Depot will see that. Companies like Caterpillar will see that. Companies like McDonald's will see that. And many various others that I have on my shorting ops kind of list here. So that's the last stage that we kind of have to play out in this game. We're getting Apple down. That baby, I think, has further to fall. And it's just a question of, does it want to do it over the next 2 months, or does it want to wait until, let's call it 1Q, 2Q of 23 to make that fall, right? Something I don't feel comfortable with. I don't know if you guys saw this. A senator bought up $110,000 in this bear ETF. He sits on the Senate Finance Committee, and as a politician, he's actively shorting the U.S. economy. This is not something that rubs me right. If folks want to short, that's their own decision, right? But as a politician in the U.S. government, it does not feel right that somebody in that position shorts and bets against U.S. companies. It doesn't. I'm like, how is that even possible? How is that even possible, man? I think we need to look over some things in this country. Like, what? I literally was in shock, and it takes a lot nowadays to shock me, to make me say, wow, what? That's a situation where I was like, wow, what? What is going on here? You got to be flipping my flapjacks. Come on, man. I have an important lesson that I want you guys to remember, okay? And it's in regards to ELF stock and what happened here with me, okay? And a lot of you guys have been buying stocks at incredibly cheap prices for the last number of months, and will likely continue to over the next few months, okay? And what I will tell you is, don't be afraid to let those babies run. Let those stocks run. Do not be in a rush to take a 20, 30, or 40% gain in those stocks. Let those babies run for the next several years. Because if you're in the right type of stocks, right, the runs they go on, if you were quick to cash, you were just going to look back with nothing but regret, to be honest, okay? And a stock like ELF comes to mind. Whereas this is a stock I looked at it was either late 2018, early 2019. I got in this stock when it was like, oh gosh, maybe a $7 or $8 stock, something insane. And, I bought shares and I bought shares, and I think at one point I owned like 10,000 shares or so roughly of this stock. And, stock started to go up and up and up. And as it went up more and more, I took almost all my profits. All I have now is 1,000 shares of this ELF stock, right? And the company just continued to execute and do amazing with their business model. And I took almost all my profits way too soon in this stock instead of letting that baby run. Because what this should say today is this should say, around a $400,000 or $500,000 gain with this stock. Instead, it has this, right? And I took a lot of great profits in it, but you got to understand, a lot of the profits I took in this stock was when the stock was, $20 a share or so. And today it's near $50 a share. So I took a lot of my profits way too soon in this stock. And I should have just held and not been in such a quick way to take a profit. So let that be a lesson, you guys, with a lot of you guys buying a lot of these stocks at dirt cheap prices. Let the babies run for the next few years, okay? Now, I reacted to a video on my new channel, my reaction channel, right? Billionaire Carl Icahn came out of hiding and had some interesting comments, I thought, right? But I saw an interesting comment in the comment section, and it was around, Carl Icahn and a lot of these guys that, basically the comment from this individual was, these guys make these predictions year after year after year, and then they're finally right, and then they want to be applauded for that. And it is true that a lot of the naysayers on the market or usually say that year after year after year, and then when obviously you get a big bear market, they do look like a genius. There's no doubt about that, right? But with that being said, with somebody like a Carl Icahn, right, obviously he got saved by inflation, right? Inflation. It saved gentlemen like that. But let's also admit, on the long side, we can get saved as well. All of us longs got saved in the Rona crash by the Fed and by the government. If it wasn't for what the Fed and the government did, honestly, company earnings would have been down. Most companies would have started taking, I think we would have had likely a Great Depression, to be completely honest. If it was not for what the government and for the Fed, what the Fed did, we would have likely had a Great Depression where unemployment was 20% plus for years and years and years. Half the companies that are probably public companies would have went bankrupt. The other ones would have started taking massive losses and hemorrhage money, and we would have likely seen a NASDAQ and the S&P 500 and the Dow down 70+%. Yes, you heard me right, 70+%. If it were not for the fact that the Fed and the government came in and pumped obviously massive amounts of money out there. So they did that, the markets recovered, and we all got saved, right? So yes, the short sellers and naysayers on the market, the folks that have been talking down the market for a long, long time, they got saved by inflation, because inflation essentially created a dynamic where the Fed couldn't come save the day. And so the market just, there's nothing to save it, right? So it's gotten to fall. But we got to admit on the long side, we get saved as well. So, it works both ways. And I just think that's something important that I just want to, I think it's kind of a higher level discussion. And I think it's something we should all think about and take into account kind of as we move forward in these situations. Because, we both obviously benefit from that. And also, I just want to say thank you to not everybody that, everybody that's obviously subscribed to this channel, the main channel, but also thank you for everybody that's subscribed and enjoys the reaction videos over on that channel. I put out pretty much just as much content on that channel as I do this channel. It's just that channel's all reactions and me giving my opinion based upon another person's opinion versus this is obviously making custom videos for this channel. Much love as always, guys. I appreciate you and have a great day.